everyone. Thank you for joining MoneyOwl Insurance 101. Ask me anything. So since our last webinar in March, where we actually answered some of your burning questions on insurance, we have actually received a lot of additional questions from our followers asking us if they should buy more insurance, should they switch their insurance policies, or should they actually switch to another provider for their integrated shield plan. So today I have here with me our financial literacy trainers, Felicia and Albert, who will be here to answer your burning questions.
Hello, good evening, everyone.
Hello.
So before we start the webinar proper, just want to highlight to you that this webinar is for education purposes. And if you have any questions with regard to your financial planning or your financial situation, it's good to speak with a financial advisor before taking any action. So just in case if you do not know who MoneyOwl is your financial advisor with a social mission. We are licensed FA, and we are here to actually enable better financial security throughout Singaporeans' life journey. And if you want to actually find out more about MoneyOwl, what you can do is you can actually log on to Instagram, search for MoneyOwl, and find out more about financial literacy through our bite-sized content on Instagram, TikTok, or even YouTube. If you prefer something that is more structured, visit our website, whereby we have actually life stages checklists to help you to navigate your life stages journey, regardless whether you just have a baby, just started work, or you're going into pre-retirement, to help you to find out how to navigate your financial journey effectively. So without further ado, let's move on to today's agenda. So to start the ball rolling, what we will be doing is we'll get Felicia to share with you some frequently asked questions about insurance, and thereafter we'll open it to the ground, whereby you can ask us anything about insurance, whereby Albert and Felicia will be here to answer your burning questions. And if you have any questions throughout the webinar, feel free to actually go to the bottom of the page, whereby there's a Q&A button. Click on it, type in your questions, and we will answer your question in the next part of this webinar. So let me pass on to Felicia, who will be sharing with you some of the frequently asked questions on insurance itself.
Okay, thank you, Hui Jin. All right, good evening, everyone. Hopefully you already had your dinner. All right, okay, before I actually answer those frequently asked questions, I think it's important for us to, first of all, understand how does the Singapore healthcare system work. So with that knowledge, I hope everyone will be able to make a more informed decision with their own healthcare needs. All right, so Singapore's healthcare system can be simply summarized into this S+3M framework. All right, so S stands for subsidies, and the 3 M's will be your MediSave, MediShield Life, and MediFund. So for subsidies, every Singaporean and Singapore PR, you will receive some form of subsidy, and you'll be being tested to determine how much of subsidy you will be receiving, and up to a maximum of 80%. Okay, then after your bill has been subsidized, that is where, for some of it, you can actually use your MediSave to pay for it. However, in order to preserve our savings in our MediSave, which comes from your own income, there will be a withdrawal limit for each of this expenditure. And if the bill gets too big, that is where your MediShield Life will come in to help you pay for the bills. So MediShield Life, as we all know, is our basic healthcare insurance that every Singaporean will have for a lifetime, and it will help you to cover the large medical bills. And of course, for a small group of Singaporeans who fall through the crack when they do not have enough MediSave savings or do not have enough cash, that is where they can seek help from the social worker at the hospital to help them. They can actually tap on the MediFund, which is available to help them pay for the bill. Now, so how do this S+3M actually apply in a claim? So I have an example over here. So for example, Miss Tan, 48 years old, and she was admitted to the hospital for 5 days for a surgery. She stays in the wards, Class C ward, assuming she doesn't have any integrated shield plan. So her bill, say if she received a maximum subsidy of say 80%, her bill came out to about $4,000. Now, then the claim limit, because for MediShield Life, as all of you may be aware, there is a claim limit for each of the benefit. So in this case, if she stays in the ward C, the claim limit would likely be able to be same as the bill after subsidy. And however, MediShield Life doesn't pay from the first dollar. there will be a portion that Miss Tan will have to pay, which is what we call the deductible. Very similar, those who drive, is very similar to your excess in your car insurance. Okay, so the deductible for Ward C is 1,500. And then after deducting, that means if you take 4,000, you take away 1,500, with the remaining bill, she will have to co-pay another 5 to 10%. All right, and then that is, so the 1,500 plus the $250, that is what Miss Tan needs to pay. All right, and then the balance of it, which is $2,250, that is where MediShield Life will pay. Now, so how can Miss Tan pay for this $1,750? She can either use cash, use her MediSave to pay for it. Now, and of course, like what I mentioned, if she's not able, she doesn't have enough cash or MediSave balances to pay for this $1,750, then that's where MediFund could kick in, depending on whether she qualifies for it or not. Okay. Now, so other than hospital plan, what other kind of insurance policy should you have? So if you are just new in the workforce and you do not have insurance at all, then you should consider covering your financial losses in what we call the low controllability and high severity events. Okay, so low controllability is where you cannot control the event. We call it the very jialat. Okay, the very appropriate situation. And when such situations happen, you will result in a very high financial loss. So two of these examples would be your loss of income as well as your large medical bills should you be admitted to the hospital. And your loss of income can happen due to a premature death, where you still have dependents depending on you, or due to a total permanent disability or a critical illness. You can also incur very high medical bills and care expenses should you be hospitalized or should you suffer a disability. Now, so the primary objective or the only reason why we want to have insurance is to actually help protect us against large financial losses so that you do not have to dip into your savings to pay for all this. Now, so to summarize, the core insurance plan that you should have in order of priority should be your hospital surgical. And if you do have dependent, you will also need to have life insurance as well as critical illness policies. At the same time, also the long-term care to control or to manage to pay for your to pay for your long-term care needs. All right. Now, so in the recent month, in fact, since March, after my last webinar on health insurance, there have been a lot of questions, especially I think recently you also have seen news about our integration plans. Those of you who have just renewed your insurance policy, your integration plan policies, or received your notice of renewal, you realize that the premium has gone up a lot. And this trend will just continue. So that prompted many people to ask, should I actually give up my insurance, my integration plan, or should I actually downgrade to a lower plan? Is MediShield Life alone? If I downgrade, or should I give up? If I give up, is MediShield Life alone enough to cover my bills or not? So it really depends. Okay. What does it depend on? So first of all, what you need to consider is what is your healthcare expectation. So in an eventually be admitted to hospital, what kind of care do you want to look for? Okay, if you do not mind being in a room with 6 or 7 other patients and being looked after by a team of doctors, a big room without any aircon, with a toilet like 20 meters down the hall, then MediShield Life is good enough for you. Okay. However, let's say if you want to choose to have your own doctor treating you, at the same time you want to have more privacy, a more comfortable ward, okay, then you will need actually an integrated shield plan. All right. So this is comfort. Okay. So there is a cost to having been admitted to a more comfortable ward. The next thing you want to consider is what other benefits is important to you. For MediShield Life, is a no-frills insurance policy, meaning to say that they will only reimburse you for the benefits when you admit to the hospital. So in other words, any test or any medication you take before you get admitted, or any checkup or any review after you get discharged, you can't claim from MediShield Life. All right. So if this, this is what we call the pre and post hospitalization treatment. And if this benefit is important to you, then you actually would need to have an integrated shield plan. At the same time, MediShield Life, there's a claim limit for all the benefits. Whereas for integrated shield plan, most of us have this what we call the charge. Okay, meaning to say that whatever is the bill size, you pay for the deductible and the co-insurance, and then the rest your insurance company, the private insurance will pay for it. Okay, so you have to look at what are the benefits that is important to you. And of course, the most important, or rather one of the very important consideration is affordability in the long run. All right. So because your IP premium is going to increase significantly, especially as we age. All right. And however, can you actually drop your IP and just rely on MediShield Life? Then it really depends on whether can you consistently qualify for the maximum subsidy. Well, subsidy is up to 80%, but not everyone can get 80%. So most of the Singaporeans will probably qualify for just 30% to 50%. So that means they will still be could be a substantial out-of-pocket cost. And then the question, of course, then is, do you actually need, because generally there are every private insurance, or rather the shield providers will offer you 3 types of integrated shield plan. You may not need to get the highest plan, which is to cover the bill size of a private hospital. All right. You can choose to have a lower plan, like the A plan that covers public hospitals up to the A ward, or one step lower up to a B1 ward, which is a 4-bedded ward. Now, and about 80%, okay, of the Singaporeans who have integrated shield plan actually do upgrade to who has already upgraded to an integrated shield plan. And out of this group of people, probably about 70% of them also could get an IP, an integrated shield plan rider. So what is this rider? And do you actually need it? Okay, now, in the past, the rider wasn't so expensive, okay? It is actually meant to cover your deductible and your co-insurance. And so that you can actually, you actually cap your bill to a smaller amount. So less out of the pocket, and the insurance company, this rider will pay for the deductible and co-insurance. We all know deductible is a flat amount, it's 3,500. But what is scary is probably the co-insurance. If your bill is very big, your co-payment will also be very high. So that is the reason why people will buy an IP rider to protect themselves against this. However, the IP rider is also getting more and more expensive. At some point in time, it may even cost more than your IP integrated shield plan premium itself, because the benefit of the IP rider actually has expanded. One of the reasons is that because of the introduction of the cancer drug list in 2022, people are concerned that MediShield Life alone, or even their IP, may not be sufficient to cover the cancer drugs. Okay, the drugs that if they will be diagnosed with a cancer. All right, so that is the reason why with a higher coverage than for cancer treatment, then the premium of this rider will also be higher. And of course, the rider will also come with other perks and benefits. So one thing for you is to actually really look at the rider's benefits and the coverage to see whether is it sufficient or not. Okay, now, so how expensive can your integrated shield plan be, and how much will you be expected, or how much do you expect yourself to be paying over the next 30 years? Okay, so if you want to find out, there is a calculator called the Health Insurance Planner that's on the CPF website. Okay, you can scan the QR code. This planner will actually help project to give you an estimate on how much your premium will be for the next 30 years or until your age 90. But again, this is only an estimate, because we all know that the premium will continue to increase. So you can go and check it out. All right, so there are a few ways for you to actually find out how much you are going to be paying for this premium. So depending on whether you want to just check based on, if you just only have a MediShield Life, you can just click on projection 1. Then that will help you project how much you'll be paying using your MediSave. And then of course, if you also have an integrated shield plan, then you just click on projection 2. So that is your MediShield Life premium plus your integrated shield plan, and the chart will show you how much you'll be using from your MediSave and how much of cash outlay. And of course, if you do have also a rider, then you can click on projection 3. Then you can know, of course, the cash outlay will be much higher because the rider is fully paid using only cash. Whereas for integrated shield plan, the private insurance portion, you are allowed to use a certain amount from your MediSave to pay for it. All right. Okay, now, so if I really have an integrated shield plan, do I still need a critical illness insurance? All right. Now, then we must first of all understand what is the purpose of a critical illness policy. Primarily, the main objective of it is to actually cover loss of income, because critical illness policy will pay you a lump sum of money. So in an event, due to your treatment, you are not able to work for a period of time, you can use this money to cover your loss of income. And of course, something more important now is that you can also use it for alternative treatment. Say, for example, cancer, you can use to pay for your for medication if they are not on the cancer drug list, and other like TCM treatment or other alternative treatments. Now, so all the CI policies in Singapore will cover 37 major illnesses, and of which, of course, cancer is always will actually make up the most of the claim. So, and especially this is actually important for Singaporeans these days, where it is alarming to know that cancer patients are getting younger and younger. All right, so do get your coverage early where they are still healthy and the premium is still low. So according to this report from the Singapore Cancer Registry annual report, 1 in 4 people will actually get cancer in their lifetime. So that is like 25%. And 35% chance. And of course, for men, the top 3 cause of cancer, common cancers will be prostate, colorectal, and lung. And for female, everybody knows that breast cancer is still the most popular, the most common type of cancer. So how much does cancer really cost? So if you really want a ballpark figure, it's really difficult because it can range from a few $1,000s to hundreds of $1,000s. It all depends on what stage is your cancer, what type of cancer, what kind of treatment, and then where do you go for treatment, whether it's going to be the public hospital or is it going to be the private institution. And then after that, it's like, it really is a very wide range. So just for the estimation, okay, I have a bill here. One of my friends was diagnosed with cancer in April last year. So she was very nice to actually share with me a few of her 34 bills and still counting. Yeah, she has like a collection of 34 bills, and she says that it will just keep going up because every month she has to go back to collect for review. All right, so in this bill, okay, is her surgery. Okay, so she has breast cancer. So usually for breast cancer, you start off with a biopsy. Okay, so this is the comparison. She went to National University or NUH. Okay, so she went NUH, it means to say it's a public hospital. So after a subsidy, okay, her biopsy is $1,000. So it's about, so she receive about 50% subsidy. And of course, if she has gone to the private, this will have cost her $4,600. And then after the biopsy, when she is confirmed the staging of a cancer, that's where she starts the chemo. So that is where the amount can vary from one patient to another. It all depends on how many cycles you need to do, and per cycle, how many sessions. So for her case, she went for 5 cycles. So per cycle is about 12,000 before subsidy. And even after subsidy, she paid $9,000. So that means if she goes for 5 cycles, that is like 45,000. All right. However, she was able to claim most of it from MediSave as well as MediShield. MediShield pay a big part of it. Say for her surgery, is without subsidy it was 19,000, but after subsidy it was 9,300, of which MediSave and MediShield Life actually cover most of it. So out of her pocket, she only paid about 2,500 out of this 19,000. All right. Whereas if you look for, let's say if you look at surgery for a private, let's say if you go to a private hospital, then there is no subsidy. And you notice, you realize that not only surgery, but even the chemo will be a lot more expensive. All right. So, and of course, after that, you have your radiotherapy, you have your post-treatment with all the medication and everything. So after all the subsidies, all right, because one important thing is that last year during the budget announcement, they have largely increased the claim limits for MediShield Life as well as MediSave. That's the reason why she's able to claim most of it actually using from MediShield Life as well as using her MediSave. And her out-of-pocket cash, okay, in this case, she uses her integrated shield provider actually pay for this part of the bill, which is not very high, Okay. Now, so how much do you actually need to buy? Okay, so how much coverage do you need to cover? Since we all know that the critical illness, the treatment can be from a few $1,000s if you have subsidies to a few $100s if you do not have. However, do remember that critical illness primarily is meant to cover your loss of income. So you should, for late stage, which is the priority, you should get, it's recommended to get about 4 times the annual salary. And of course, in the market, other than late stage CI, you also have other type of CI, like your early CI or your multi-pay CI. If you do, they are more expensive. So priority is to be covered under the late stage CI first. And if you do have some budget and still have some extra money after paying for everything else, we can get a little bit of that, about 1 time your annual salary. So it is not, for late stage CI, it is not really very expensive. Okay, it can be quite affordable. So if you look at this comparison over here, so say for a male and female, this is a male premium table and a female premium table at the bottom. So for the female, all right, at the age of even, let's say 35, for 100,000 sum assured, a late stage CI costs less than $30 a month. All right, so it's about 311 a year. And if budget allows, and it's optional, if you want to get early and late stage CI, that means upon diagnosis you are able to claim, then of course you can see that the premium will be much higher. All right, but of course, between early to late stage and multi-pay CI, if you could just squeeze a little bit more, maybe a multi-pay CI could be a better deal. All right, because multi-pay means that after the first claim, you could be in remission, and then if years later, means you can actually claim more than once. So should the cancer relapse, you could actually claim again, or should you suffer another type of major illness, you can also claim again. Whereas for the late stage and the early CI, you can only claim one. It's a lump sum payment, all right? Now, so how about children? Then we also have parents asking us, should I get insurance for my kids as well? Well, the most important is still hospital plan. Yes, you need to get a hospital plan for your kid. And if you get it early, when they're still young, it's actually very affordable. And you pay the premium most of the time using your MediSave. Otherwise, unless you have a rider for that, then that rider part will be using cash, which is also not very expensive. You only get very expensive as we get older, probably at about above 40 years old. All right, for kids, they are still very affordable. So that is primarily the most important thing you need to get for your kid. Then, of course, get for them early so that when they're still healthy. And of course, if you do have some budget, then it is good to also get for them a critical illness. All right. And whether do you want to get a whole life insurance policy for them or get a life insurance for them? Well, then it depends. All right. So it's really entirely up to you whether you have the budget for it. Now, so just remember that insurance is an expense. All right. It's an expense because nobody buys insurance hoping to claim. All right. So you really do not want to spend so much money on insurance. So so you want to buy as much as you can, all right, or as much as you need with as little as possible, okay, so that you can keep the most of the money for your other expenditure. Now, so even for under MAS Basic Financial Planning Guide, they also recommend that you should not be spending more than 50% of our income on paying the insurance policy. Okay. So very quickly, to find out more, please log into our website to go through the Our Insure and Our Star, all right, which will bring you through some of like the cost of some of these insurance policies. And with that, let me we will go into the next segment of ask us anything. Okay, over back to you.
Hello everyone, we're back. So let us actually kickstart on the next section, which is Ask Me Anything or Ask Us Anything. So I think just now what Felicia has actually shared, there are two kinds of scenario, the jialat or the bo bian, which means situation that are out of control and we need to get coverage for large medical bills or expenses because getting old is part of our life, right? So I think recently in the news there have been actually a lot of news that actually highlighted on an insurer, Great Eastern, pausing the issuance of pre-authorization certificates to policyholders admitted to Maui Orchard as well as Mount Elizabeth Novena. And some of our followers actually came to us to ask, should I change to another insurance provider? Given that my current insurance provider is no longer issuing pre-authorization certificate. And this actually brought me a lot of uncertainty. They are very concerned. So maybe we'll pose the question to Albert. Albert, what do you think?
Yeah, I think this is a very good question that is top of the mind for a lot of integrated shield plan policy holders, especially when the news article comes out. Even within the office itself, we have colleagues asking, "Hey, what is this about? What should I do?" But a lot of times we just need to take a pause, take a step back, and look at the situation in a more holistic way, right? So. Firstly, I think we need to take a step back to understand what is the letter of authorization in the first place, right? So basically, it's a tool that insurers have with the hospitals, right, to manage their costs, right? So ahead of a planned hospitalization, typically you would submit this letter of authorization, right, which tells the insurer what procedure you are going for, what's the estimated cost, and then the insurer will give you the go ahead, right? And then you have a peace of mind. So it's peace of mind for all parties. It's actually a necessary way to help you mitigate your healthcare costs away as well. It also gives you a heads up, right? How much to expect from this hospital bill. Now, I also want to bring in the point about private hospitals in Singapore and private healthcare. A lot of times when we talk about private healthcare, we also need to remember for integrated shield plans, not all hospitals are included in the insurer's panel of hospitals, right? So this is a timely reminder for many of us, even if we are on the best plan, you may not have access to all private hospitals, right? So coming into the news, right, the hospital named that has been removed from the panel, right? I think this is nothing new as well. I think most importantly for policyholders, for us, what we need to do is to make sure that we are updated with our policy terms and conditions, right? Best of all, if we are not in a situation that we need to claim that is the best case scenario, but if ever there is a case where we do require hospitalization, always check whether or not that hospital is within. If you are looking for a private hospital setting, right? Do make sure that it is part of the panel of hospitals. And some insurers, to my understanding, there is also panel doctors as well, because in private practice, the doctors can practice at multiple hospitals, even at government hospital setting as well. So one final thing to close off for this question, I feel, is that a lot of us forget that when we sign up for the policy, there is actually a clause that says that terms and conditions are subject to change, and the insurer just needs to provide 1 month notice ahead to all the policy holders. So this change we know is coming, right? So let's just be prepared for it. And I think there's nothing more important than staying healthy, right? But obviously today we cannot predict if an accident were to happen and if you're hospitalized, then we need to know what to do for our next steps.
Yeah, actually, we have a lot of questions on critical illness. I think maybe first of all, can you actually share with us what is a critical illness insurance and how do you actually buy a critical illness insurance? Can it be like a standalone or do you have to buy with a life insurance?
I can take that. Let Felicia take the rest.
Thank you. Okay, I will add on.
Sure.
Anything you missed out.
Yeah. I think definitely is on top of the minds of many of us when it comes to critical illness. There are a few types, as Felicia covered earlier this evening, right? You have your standalone late stage critical illness. That's your conventional type of critical illness. If you have bought a critical illness insurance some time ago and you forgot what it is, right? If it has been more than 10 years, most likely it's going to be that conventional late stage critical illness insurance. Now, more recently, as what Felicia has mentioned as well, there is also an early stage critical illness type of insurance, right? Which, as the name suggests, it covers you for the earlier stages, stage 1, stage 2, right? Some insurers do cover stage 0 as well, from my understanding. And these days, closer to recent history, you have multi-pay type of critical illness insurance, which mitigates the problem or the issue which Felicia mentioned earlier, right? That today, when you have a lump sum payout for either your late stage critical illness or an early stage critical illness, that policy lapses, right? There's no more coverage, and now you are a cancer patient. And with this condition, you cannot buy another insurance to cover yourself. So with this newer multi-pay critical illness insurance, you get a second layer of safety net, right? That provides you with a recurring coverage and also gives you a more comprehensive coverage as well. So if we were to go by cost, all these are standalone plans that I mentioned. In terms of cost, is from lowest to highest. Your late stage will typically be the lowest cost, followed by an early stage critical illness plan, and most expensive being the multi-pay type of critical illness. Now, that is being a standalone plan that you can purchase, right? And today, you may also want to choose to use a rider, right, to add on to either a term life policy or a whole life policy, depending on what you are intending to cover for, right? So depending on your needs, right, these three plans that I mentioned can come in the form of a rider to add on to a plan that I mentioned earlier. So I think largely that covers pretty much all types of critical illness insurance.
Okay, if I may add on, because the question was like, so should I buy standalone or should I add on as a rider? Then it really depends. The benefit of riding on to, say, a whole life plan is that it runs with the whole life. So if the whole life will cover you until age 100, that means your CI will also cover you at age 100. Whereas for standalone CI plan, most of the time, they cover you until only age 75. So the last thing you want to do is to write a CI rider on an endowment plan, because most endowment plans are very short term. So it's either you add on to, so even for term plans, even if you write on with a term plan, most term plan will cover you only until age 75. So really depending on what you want. If you want the CI protection to be as long as possible, then you can add on to as a rider through your whole life, because there are many people who are diagnosed with cancer after age 70. So if you feel that it's important for you to have a longer term protection for a CI, then you buy it as a rider. However, because for most of the standalone CI is only under age 75, right?
Yeah.
Yes, as of now.
I think, Felicia, you mentioned about, covering for children. So we have a lot of concerned parents over here. And one of the questions that the parents actually is asking is, if I'm going to buy a critical illness insurance for my kids, you mentioned that if I'm buying for myself, I should cover up to 4 times my annual income. But what about for my kids? Should I cover them up to 4 times my annual income?
You can do that, all right? You can do that, or you can cover, or you can measure based on the expenses, all right? So usually, let's say if the child has a CI, and then as a mom, you may want to just quit a job and focus on taking care of a kid. So which means to say it's a loss of your income. So you can actually use that payout to cover your loss of income. So you can take that as a guide to still buy 4 times your annual income, all right? So yeah, so that is one of the way of doing it. Yeah.
Yeah, and I think we also have one of our attendees who actually says that she has a breast cyst and it's benign. but the insurer has actually excluded her from the policy itself for the CI policy. And she wondered if she should excluded her for breast cancer coverage. So she wondered if she should get actually more CI coverage. And should she actually try to maximize her coverage as much as possible?
So you are saying that she currently has a CI policy or doesn't have it?
She got excluded for breast
Okay,
cancer,
yeah.
because she has a cyst.
Hmm.
Even though it's benign, the insurer has actually excluded her for breast cancer coverage. She's wondering if getting a CI insurance right now would be ideal because she already have exclusion. Should she not even buy a CI insurance?
Okay, because CI policy covers 37 major illnesses, so it may not be, so if she's just excluded for breast cancer, clearly the risk of getting a breast cancer is high. However, there's also risks in getting other CI. Yeah, so it's really there is no right or wrong answer. So it really depends on whether does it matter. Do you still want to get coverage for other types of CI like? Because don't forget, other than cancer, there will also be, because out of the 5 major CI, which is the 5 cause of death, 3 of them are related to heart disease, stroke, you know. So if you look at my previous slide, okay, those that is highlighted in green, those are the 5 top cause of death. So cancer being one of them, but not forgetting heart disease is also a very, very common, as well as diabetes is also a very, very common critical illness in Singapore.
So now let's get back to basic. So we have a few participants who actually ask questions in terms of the terminology. Insurance is really very confusing. There are questions like accelerated, co-insurance, deductible, panel, non-panel. So we have specifically 3 questions. One is, can you please explain the term accelerated in simple English? I see this in my critical illness policy and I do not understand. And what does co-insurance and deductible mean? Why is it determined by the insurance company? Or is it determined by the hospital? Where can I find this amount?
You want to take the accelerated
Sure,
one?
let me take that.
Alright.
Yeah, I think for someone who is looking at the insurance paper like years after they first got the insurance policy, definitely you would have forgotten even a term like my coverage, the duration of my coverage and all that. Yeah, everything I would have forgotten even if I wasn't in the industry. So very quickly, what does accelerated mean? I think this is a very good question because there are different types of benefits when we add these as riders to our insurance policy, our life or whole life or term life insurance, right? So accelerated simply means that the benefit is being paid out of that added benefit. So it's part of your, so let's assume today I have a base term policy of $1 million. Then I bought an accelerated critical illness rider of 500,000. So today, if I was diagnosed with critical illness, I can proceed to claim, and 500,000 will be accelerated out from my 1.5 million. So I'll be left with 1 million of my death coverage in the policy. So that's what accelerated means. So it forms part of your total sum assured, right? So you need to check in your insurance policy document, what is your total sum assured, what is the critical illness benefit sum assured, and since yours is the accelerated type, it will just get paid out and then you will reduce your total sum assured and the remaining benefits. Now, adding on to this, there is also another type of critical illness benefit that you can add on, which is additional critical illness rider. Now, additional, as the name suggests, it is added on the base sum assured that you have. So I use the same example again. I have a 1 million term insurance, right? And I add on a 500,000 additional critical illness rider. So in the event if I claim, I have 500,000 on top of the base sum assured. So that's the two difference between what it means by accelerated or additional. Yeah.
Okay, you can take a break. Okay, let me take the co-insurance and deductible. Okay, so deductible, like what I mentioned, it's just like if you have a car, then you understand excess. Okay, so that means it is co-payment. All right, that means you pay. It's a flat amount. So even for MediShield Life, that is deductible as well, which is $1,500 for Ward C, and then $2,000 for B2 ward, and then for the private, not for private, for integrated shield plan, then the deductible is $3,500. So it's a flat amount. And then after this, so you take whatever that is the claimable amount, you have to less off this deductible. Okay, then whatever is the balance, you have to co-pay. So for integrated shield plan is 10%. And then for MediShield Life is a step up, from 5% to 10%. Now, so why do we want to have, or why is there a co-insurance and deductible and how come insurance don't pay from the first dollar? Okay, the reason is because if the policy were to pay for the first dollar, then the premium will be very high. The reason of having this co-payment system is to actually reduce the premium so that it's still kept at a more affordable level. Because imagine, let's say if my bill is only $500 I can claim, then you can imagine the premium will be very high, right? Okay, so I hope that answered the question. So, and then the next question is
we have actually a question on MediShield Life. So this Candy actually mentioned that MediShield Life is able to use in private hospital. Is it true? How much subsidies am I able to use as compared to public hospital?
Okay, how the claim, or rather how the claim is being processed, is that whatever the MediShield Life pays for in a subsidized bill in a public hospital will be the same amount that they will be paying if you receive treatment in a private hospital. Okay, take for example just now the case of, say, cancer. All right, the example that I gave. So let's say if MediShield Life is able to pay, say, $9,000, okay, and I think the cancer surgery was 19,000. So if MediShield Life could pay 9,000, that means the other $10,000 I would pay using my MediSave or my Shield plan. Now let's say if I'm admitted, if I use a private hospital, if I get my cancer treated in a private hospital and my bill is, say, the surgery is 50,000, which was shown in my table is 50,000. Now MediShield Life will still only pay 9,000. All right, so in other words, the other $41,000 you will be paid either using your cash or using your integrated shield plan. However, not to forget that for cancer, there is a claim limit for integrated shield plan. That is not as charged, even though your integrated shield plan is as charged, the benefits as charged, is only as charged for all admission or all other conditions except cancer. For cancer, they do impose a claim limit as well. All right. So that is how, yeah. So if you ask me how much subsidies do I get, it's the same amount. All right. It's just that for private hospital, you don't get any subsidy. That's why the portion that is going to be out of pocket will be much higher than if you go to a public hospital.
So Felicia, you mentioned that the cost of seeking private medical treatment is actually really high. So I have one attendee over here. He says that being a low-wage worker, does 4 times annual income still make sense for him? Because his 4 times annual income is only $60,000. So we're getting a $60,000 critical illness plan. Is it sufficient to cover him?
Okay, why do we use income is because in an event of a major illness, you may be out, you may want to leave the workforce for a while when you recuperate. So that's why we use 4 years of annual income as a gauge. Now, let's say if you, again, like what you mentioned, if you are a low income worker and if you want to buy more than 4 times, then affordability is an issue. So you buy according to how much you can afford the premium, all right?
Yeah. And actually, we have maybe moving on. We have an attendee. I think this is actually very encouraging. He's asking, he's actually still studying in university, and he's asking, should I buy insurance when I'm still studying university? Maybe Albert, you want to take this question?
Yes, I like this question because as I was delivering the same insurance topic to a group of youths, right, I also got this question. Today I'm still in school, right? I don't have an income. Do I need any insurance? So the question I post back is that, right, if we go back to the earlier slide that Felicia shared today, the two reasons why we want to get insurance is for the loss of income, right? To protect against the loss of income and also to protect against a very big medical expense, right? So since you are a student, you do not have any income to protect, you do not need insurance to protect against loss of income. But you are a student, you may still fall sick, you may still go to hospital, you may still incur big medical bills. Therefore, you need insurance to cover your medical expenses. So I hope that clarifies.
And I think there is an excellent plan for NS men as well, right?
Oh yes, yeah. Thanks for reminding. Yeah. Today, if you happen to have served NS, right, do check out the MINDEF MHA Group Term Life Insurance, right, and that forms a very good base. Even if you have left NS National Service, right, you are still entitled to carry on with the voluntary scheme. Even if you have already ORD, right, or MR, so long as you're still within your statutory age, right? I do highly encourage NS men and spouses of NS men to also check out this very good group term life insurance that offers a very good coverage at a very, very affordable cost, right? And yeah, do check that out.
And can be extended to your spouse as well as your kids. So guys, do check out the MINDEF MHA Sing Life Insurance. That's really the best deal that you should actually cover yourself. So moving on, a lot of them are asking, my insurance agent is telling me to buy term life insurance, but my friend is telling me, no, you should buy a life insurance. It's better, get cash value. It makes more sense. So what should I buy, a term or a life insurance? Both covers death. Which one should I buy?
Okay, we will always ask, we always encourage people to buy term because whole life is very expensive. It's easily like 15, the premium will be 15 to 20 times more expensive than a term.
15 to 20 times?
Yeah.
Really?
Yes.
Wow.
So you have to ask yourself, okay, we have to go back to the drawing board, all right? Circle back your drawing board. Okay, what is the role of life insurance? It is to cover a financial loss. So you want to be fully covered. And if you want to buy a whole life, you may not be able to fully cover yourself. Say, for example, your dependents, if you calculate how much your dependents need, it could be, say, for example, 500,000. And then you ask yourself, if you want to buy a 500,000 whole life insurance, okay, it's going to cost you like probably $10,000 of premium a month. Can you afford it? So if you can't afford it, then what will your agent normally do? They'll probably say, okay, you buy less. Maybe you reduce 100,000 sum assured, so they can fit into your budget. Then the next question is that, okay, with 100,000, is it enough? Should anything happens to you? Because at the end of the day, this amount of payout is meant for your dependents so that they could carry on living as normal as possible. So that is the reason why the only way to cover yourself fully in order to meet the needs that your dependent will get is actually to get a term, because it's very, very affordable, especially like what we have mentioned, the MINDEF MHA group term insurance is only about $20 for 1 million. Is it 1 million? $20 all the way per month until age 60.
Per month.
Yeah.
So this is really like using that $20 to buy a safety net. Anything happen to you, you stretch your $20 to give you 1 million coverage. But assuming if you were to buy a life insurance, you mentioned that it is times 15 to 20%, 20 times more, not 20%, 15 to 20 times more, and you will get lower coverage.
So
that's why
maybe I also would like to chime in here, not to say that whole life plan is not good. There is no place for a whole life plan. There is a use, there is a reason why a whole life plan is there. Maybe I just explain why the cost is so much higher first, right? Because everyone says there is a cash value that you can get back in a whole life plan, but you are actually giving the insurance company more in your premium for the insurance company to invest in what they call this participating fund. Within the insurers participating fund, where there is a return, they put it back into to your policy as a cash value, and that is where you get the cash value from. So in other words, there is also this camp of people who will tell you, you buy term, you invest the rest. But we at MoneyOwl, we feel that you buy term not because you want to invest the rest, because you buy term so that that's the only way you are able to sufficiently cover yourself, like what Felicia mentioned earlier, right? If you need 500,000, there's no two ways about it, right? You don't reduce your coverage because you cannot afford. You look for a tool that can give you an adequate cover at an affordable price. So that's the first thing that I want to say. But also, bearing in mind, sometimes we do need to have a whole life coverage, right? So in the case of a critical illness, if I'm covering that medical expense, and I don't know when I'm going to fall sick, right? So perhaps there's a time whereby we will need a critical illness to be riding on a whole life plan so that I can get a whole life of my critical illness coverage as well. But usually we do not get so much coverage for that, because as we grow older, we do not need to cover the loss of our income. It's really just for alternative treatments or any treatment cost that is not covered by our integrated shield plans. Yeah. So yeah, whole life is there for a reason. But we shouldn't really just focus the discussion on term life or whole life, right? You have to take a step back, like Felicia mentioned earlier, go back to the drawing board, ask yourself, what is the purpose of you getting that insurance? And then that will guide us in our decision much better.
And I think the next question is there are a number of people asking, what about investment-linked insurance, ILPs?
Oh, wow.
Yeah,
Okay.
because my agent has been telling me you are young, you should try to grow your wealth. So let's buy an investment-linked plan so that you can actually get protected and invest at the same time. What are your thoughts on this? Maybe
You want to
Felicia?
start? Okay, me start first?
Yeah,
Okay.
I can start first.
Right. Okay. ILP actually is very expensive, all right, because the cost, the charges, and everything would be paid by you, okay, the policy holder. And because it's just it's called investment link, simply means that it's a insurance that give you protection, and then they add on a layer to help you invest. So because it's investment, unlike whole life, there is still some cash value that is guaranteed. For investment link, the cash value is not guaranteed at all. So that means you actually shoulder all you bear all the risk of it. And for the mortality, so you still have to pay for the insurance portion, which is what we call the mortality cost. And the mortality cost, the charge will actually increase with age. So that means for the same amount of premium that you're paying for ILP, every year more and more will actually go towards protecting you, going towards fees and charges, and then there'll be less and less being invested. So your cash value actually be lower over the years as you move on. And then on top of that, things like fund management fees you have to pay. Then how much you have to pay, then it will depend on what kind of funds you choose. So if you choose an equity fund, which is actively managed, then the fee charge will be also much higher. So at the end of the day, again, back to the question, why do you want to buy an insurance for? Okay, if you really want to invest, you could actually do it on your own at a much lower cost. There are instruments, again, that charge less than 1%, all right? Whereas for investment link, you have to pay your agent commission, you have to pay for the fund management fee, you have to pay for so many things. So at the end of the day, what is being invested is actually very little.
Yeah, so to add on to what Felicia mentioned as well, at MoneyOwl, we view investment-linked policies as an investment, not an insurance, right? So if you were to rate it as an investment, I don't think it's a very good instrument to invest in, because essentially you are going through an insurance company to invest in a unit trust fund, right? If you really like to invest in a unit trust fund, you can just invest directly in a unit trust fund without having to pay the additional charges that the investment-linked policy charges. Also wanted to supplement the point on the mortality charge. So these days, I also believe there are the fixed mortality charge type of investment-linked policies, and they may seem attractive on the surface, right? Especially with all the joining bonuses, swap-up bonuses, loyalty bonuses, and all that. But do remember, at the end of the day, all these bonuses paid out from somewhere, right? They are not free gifts from nowhere, so they actually from the initial cost that you pay. There's the whole chunk of distribution cost in that type of insurance investment linked policies as well, right? So for that, really, yeah, if you really want to go and invest in a unit trust fund, you can just invest in the unit trust fund directly. You don't have to go through an investment linked policy.
Yeah, but what if I have invested? What should I do? So one of our attendees is asking, should I cancel my investment linked plan and buy a term insurance? Because I think a lot of people see investment linked plan like a 2-in-1 coffee. So you have milk, you have coffee, you have even sugar in it. I don't need to worry, I just buy one product. It's just one sachet. So same thing, that's why they bought it. But now that I am aware that it's so costly, what should I do? And what I wanted is actually more to protect my life. So does that mean that I should terminate my ILP and buy a term life? Felicia, it seems to be nodding.
Okay. All right. Usually, I mean, I do come across question very often. Okay. So of course, we will always never suggest people to cancel the policy, especially if there's protection in it. So one advice is that you could buy a term life first. Okay, get covered first. After that, you can monitor the performance of your ILP. So if the funds are performing and has break even, yeah, you can actually do what we call partial withdrawal. That means you sell away some of these units that are making money, and then you keep some of them. So you don't terminate the policy entirely at one go, but rather you sell off the funds one at a time. Where the funds are performing, you start selling them. But before you do that, then of course you must have a backup plan, and that is that you must get a term plan first to at least protect yourself. Whereas for this investment linked plan, then you don't cancel it right away.
Yeah, I think to add on, even if it's not an investment linked policy, if it's a whole life plan as well, today you may have learned that term life insurance is a more affordable way to get covered, but please do not go rushing to cancel your whole life plan, because you may have either developed certain health conditions through the years, and you may no longer get that original coverage that you had, or you may have certain riders that you have added which were on previous terms, right? So I think there is one area of critical illness that was not discussed today, which I thought would be helpful that we bring up, which is the definitions, right? So earlier, I think in the slides, there was this list of 37 critical illness that is listed out by the Life Insurance Association of Singapore. And this list of 37 has constantly been updated, and the latest update, in fact, is in June of 2025, June of 2025, right? And it's really quite recent. So if you have bought an earlier policy and that was following the older definitions, either the 2019 or the 2014 definitions, they may have been they may have been easier for you to claim for certain conditions, may be harder for you to claim for certain conditions. But all in all, the advice is to review your current coverage, right? Because you may not be able to get that same coverage again because you have you are already older in life. You may have certain health conditions and all that. So please do not go rushing to terminate your policies. Always make sure that you have sufficient. First, speak to a licensed financial advisor or insurance agent to review your total insurance coverage, and before you decide you want to terminate any. So that's really a more structured way to do a restructuring of your insurance plans.
Yeah, I think one of the issues that we commonly see nowadays is when we see, for example, your shield plan premium going up, or you realize that you should have actually bought a term insurance rather than a life insurance because the coverage is insufficient. Then the first thing that comes to our mind is cut costs. Okay, terminate. Should we do that? If we were to terminate a life insurance, does that mean that we will be able to buy a term insurance easily to actually match up the coverage that we want?
Even if you're still healthy and could get, I always believe that you cannot buy back the same policy at the same price. Because when you bought your policy, say 10 years ago, you were 10 years younger. So it was actually cheaper. So even if you could still get the same coverage, but the price would be a lot more expensive.
So that's why I think for fresh grads, if they want to actually buy insurance policy, we're encouraged to do so as well. While you're young, cover yourself. So we have a parent here. So this parent has actually bought life, health insurance, endowment, personal accident insurance for her son. And her son is actually getting married soon. So in terms of the beneficiary for her, or for all these policies, be given that she has actually been paying for more than 2 decades. So how can she actually make sure that the policies that she has bought for her son will go to her or the family rather than the son's future wife?
This is actually a legacy planning question.
Yes.
Yes,
But
alright.
still insurance related.
But yes, okay. What she can actually ask her son to actually do a nomination form to nominate her as the nominee, as the beneficiary. It doesn't automatically go to his wife actually. Yeah.
So
Unless if he doesn't do, unless he didn't write any will or any nomination, then under the Intestate Succession Act, his newly married wife will get half of it, and then she will get the other half. Yeah.
Okay. And what about, I think we have quite a number of questions on like disability income as well as critical illness. So there's
Okay.
another question about disability income policy. Do you think it's necessary? Total permanent disability. Because even for the MINDEF and HA, they do have term life, they have total permanent disability, and a lot of, especially at different life stages. We have one question. He says that my insurance agent keep calling me to up my total permanent disability and critical illness coverage whenever I reach a life stage or a milestone. So how much should I cover? And do you think I should actually buy more? I'm very worried about overbuying.
So I see quite a number of questions asking about whether or not should I buy this policy, is this policy necessary? It will be quite difficult for us to answer these questions over a webinar setting because we do not have full view of your current financial situation. We do not know your current insurance coverage as well, right? So what we have actually is referral arrangement with our partner, iFast Global Markets, right? And they have certified financial planner, qualified financial advisors who are able to sit down with you and do an insurance review. And that's what we do suggest for attendees of tonight's webinar. If you have questions relating to specific insurance that you are thinking, or you are trying to look for a second opinion, your agents are telling you this. I saw another question about agent one telling you this, agent two telling you another thing, who should you believe, right? So if you want to get a second opinion or to just seek out a review for your current insurance policies, right, please do check out the MoneyOwl website under insurance referral. Leave your details there, and a qualified financial advisor from iFast will get in touch with you for an insurance review. And I believe that will be more beneficial than us trying to guess, and us giving kind of piecemeal answer online today. Yeah.
Yeah, and I think a lot of people are actually re-evaluating their insurance. So we have this attendee who has actually a whole life plan, and currently the cash value is equivalent to the sum assured. So he's wondering if he should redeem it and use the cash payout to buy a cheaper term life and invest the rest. Does it make sense?
What do you think?
Whole life plan to convert it out. Again, I think this is related to the previous question, right? Go back to the drawing board. Ask yourself whether or not at this stage of your life is that coverage that the whole life plan, if you were to convert it to a paid up plan, is it going to be sufficient for your current needs, right? Because again, just by your question, I do not know how old you are now, how many dependents you have. So again, yeah, I do recommend for you to sit down with an advisor, right, and go through a very detailed financial analysis, right, and to decide whether or not that should be a good course of action for you.
And I think there are also some attendees who are asking, they do have some pre-existing conditions. So do you think any insurance will still insure them? What should they do?
It really depends on what is the existing condition. All right. There could be whenever you apply for a insurance policy, okay, there can be 4 outcomes. One is that they accept you as standard life. Number 2 is that they charge a higher premium. We call that premium loading. Or third, they call it the exclusion. That means they exclude the particular condition. So it all depends. Of course, if some of the conditions that are more that could lead to more complication, then they could decline the application as well. So there is no, you just have to try and apply and see what at the end of the day, the medical underwriter want to see what is the condition and how well they control it. So you have to declare fully like what kind of medication you're taking, when was the last attack, were you hospitalized before, how long have you been out of job because of condition. So all this they will take all this into consideration when they assess whether they would accept you or not. All right.
Yeah, also to add on to Felicia's point that these days there is also this thing called preliminary underwriting that you can submit with through your advisors to get a sensing of whether or not are you likely to get insured at various insurance companies. So yeah, speak to the advisors that we have partnered at iFast. They should be able to get you if depending on what kind of situation you are in, what kind of medical conditions and all that, and you should be able to get a better sensing from there.
So time passes very well when you're having fun. Now it's 8:35. So I'll post the last question. Okay. The last question I think is actually pretty fair. So just now, Felicia, you mentioned about, even though you get coverage for integrated shield plan, some of the shield plan insurers also have this term called panel doctors.
Yes.
What if the doctor that I'm seeing is not on the panel?
Okay, if your doctor is not on the panel, then 2 things will happen. Number 1, it may be harder for you to get a pre-authorization letter. Okay, number 2 is that if you have a rider, then your rider will not, the amount that you need to pay for your co-insurance will not be capped at 3,000 because at the moment, the panel doctors mainly is because for your riders is to reduce the out-of-pocket cash. So if you go to a panel doctor, then the co-insurance is 5% or capped at $3,000. So let's say if it's not a panel doctor, then there is no cap. So it's either 5% or 10% of your remaining bill after your deductible. Yeah.
Okay, so it really depends on the list of panel doctors that your insurance work with. Now, of course, your comfort in seeking treatment with these doctors before you decide if you want to go to these doctors. So we have come to the end of our webinar. So let us know how do we fare and what do you think of the webinar by scanning the QR code on the right to fill out this survey form. Besides that, you can also join our mailing list by scanning the QR code on the left, and you'll get a copy of today's presentation. So I hope we answered all your burning questions. So feel free to actually comment, this video will be uploaded on YouTube. If you have further questions, then we'll get ourselves ready to answer your next burning questions on our next webinar. Thank you very much and have a great evening. Good night.
Good night.